Hello everyone, how's everyone doing? Hope everyone's having a wonderful Sunday. I wish everyone great luck and great awareness in the upcoming week. The upcoming week actually is just marking the days that I have eligible to trading and days that are going to be dedicated to just reviewing what happens. And this week, honestly, is very dry. And we also have a bank holiday in the upcoming Monday, not the upcoming one, the one that's after the Monday we have tomorrow. So without news, we don't have much volatility, and everyone must be cautious in the positions that they see, or at least they think that they see. And um, yeah, today we're going to be reviewing Friday, May 16th. And this was the video that I was supposed to make on the morning of Saturday, but I just don't find the time. And Saturday is my only day off the week where I don't have anything to do with trading, so I moved the video towards Sunday. And before actually recording the video, I was thinking of creating an outlook video for the following week. But honestly, I think that would just be a robbery of what ICT had posted this morning. I will put that video in the comment section. If anyone would like to take it from a more reliable source with more precise and exact wording. I know sometimes I mess up the wording and I don't exactly state things for what they are, and that could cause some confusion. But whatever you take from my videos, you can take 100-fold better from ICT videos. So, as always, information should not be considered an offer or enticement to buy, sell, or trade. Here we have the weekly chart for the EU Nasdaq futures June 2025 contract. So again, I'm just having this on here just to show you how the week closed off for this Friday, and just to familiarize you with the arrays that I'm going to be displaying on daily and more micro time frame charts. Here we have this SIBI here, and I have the quadrants labeled out. That's the top quadrant, the 0.75, it's consequent encroachment. This is the lower quadrant, 0.25, and this is the lower quadrant. You can see that we spent almost the last 3 days trading inside of the 0.25 level here, and we'll get more into that once we move into the daily time frame. But this is just to familiarize you with the arrays that I'm going to be displaying on the lower time frames. Here is this accumulation range that we have also labeled out in my previous videos, and we said that we wanted to see how price would build up inside of this range to eventually come here and take that high, giving us an all-time high. Here is a daily chart, and as you can see, we have that final candle as Friday, May 16th. You can see it was a very slow candle, which was expected, considering the first 3 days of the week with how we expanded higher and rushed through this imbalance here and started to work in within the level of 0.25. Now, the first thing I want to mention is this discount wick and how we were able to, stay within the range of the city. So if you draw out this wicks here, this discount wick, as you can see, down close candle, the wick beneath it is the discount wick, and the wick above it, which is not visible here, is the premium wick. So drawing out the midpoint level of that, you can see that we have it being used once here, bringing price higher. Then we drop down, use it once more, rush back higher, form this order block here that we will talk about more, or sorry, mitigation block that we'll talk about more following. And we rush through it, making it a premium wick, and then we refer back to it, we then drop lower, we come back to it, refer to it again. So you can see we find resistance off of its high before, but then we find the gunpowder to rush through it and close through it again, making the discount wick again. From there, we return back to it, also lining up with this imbalance here. Closing is higher, and then the next day, followed closing as it did here. Now, the reason why I wanted to talk about the 0.25 level and how we worked in it is because we also have this mitigation block that we just talked about that has its consequent encroachment lined up almost perfectly with the 0.25 level of this wick. Oh, sorry, BCB. And as you can see, it's finding the most resistance that we have seen in the past week at that level. So the main objective of today is seeing how Friday continued to work within that level 0.25 and how it used the low of the weekly CB here to kind of have a rejection back higher and closing as a consolidation gap. Because if true rejection is found off of the 0.25 level, which is also consequently the 0.5 level of this mitigation block, then that's pretty safe to assume that we're going to close lower. An extra point that I want to leave in here, and this was also mentioned on ICT's video, is that expecting this candle here, this liquidity void here as well, to be filled would be unpractical if we wanted to see these following levels be worked through and pushed through in order to form new all-time highs. It would just be logically exhausting price, and it would just make the whole process a lot more complicated if we just drop down lower here and touch this gap here and possibly even this liquidity void and just spend time within there. It would just be unpractical if price really wanted to move higher. I would say if price wanted to move higher, it would use energy and volatility that it will have in order to push through this mitigation block and through the levels and maybe towards this gap here. But this is all talk for the following week that is upcoming. And something that does concern me with the news that we have in the upcoming week is that it's very slow news. We only have one day that has red folder news. Friday is going to be the day post market holiday, which is Monday, May 26th. We have a bank holiday, so this basically going to serve no purpose. But that what that tells me is that it may not have the energy and it may not have the volatility injection that it would have from news as a factor. So that may cause it to kind of meander around and maybe reach lower or higher, depending on how price develops during Sunday's open. Today at 6 p.m. Eastern Time. It's currently around 11 a.m. Eastern Time. So that will be something to watch for, and that's something for you guys to take notes of and to journal. I don't think I will be making a video concerning it, just because, as I mentioned, ICT has a great video about how the week is, in his eyes, supposedly going to unfold, what he thinks. And again, I will link the video in the comment below because all credits obviously go to the engineer himself. And now we're going to move into the lower time frames and break down how price on Friday worked 0.25 level and the level of the low of the weekly CB. Alright, so moving into the 4-hour time frame, you can see that day starts just after this midnight open opens here, but this is a 4-hour time frame, so it's not really that clear. But the day is basically from this candle to this candle's close here, and as you can see on the 4-hour time frame, you can't really read much. There's not much to really take in, like we did have on Thursday, and how we were able to form ideas around 9:30's move. But on this day, you can see it was very, let's say, lethargic. Moves were up and down. But a couple of things that I want to note is the major rebalance that occurred when price touched this candle's high here, immediately rebalancing this range. and also how this candle's discount wick also lines up with the consequent encroachment. Or sorry, this candle's wick's consequent encroachment lines up with the lower bound of the weekly SIBI and how price referred to it here, forming us a low that was later used for a turtle soup, which we'll talk about more on the 1 hour, and how it was also used here and failed to close using this low here at nested low to reach in for a more discounted price before returning back higher. So moving on to the 1 hour time frame, here as you can see we have the midnight open more clearly denoted. Here we have 7 p.m., which we'll get into later. And here is 10 a.m. candle and here is the 9 a.m. Now, before we get into anything else, just remember that we did have 10 a.m. right folder news. And what is price likely to do on days where we had 10 a.m. right folder news? Price is likely to manipulate the direction at 9:30, and then 10 a.m. would likely continue further manipulation in that same direction. Or sometimes you may have the case where 9:30 is really stagnant and it doesn't really do much, and it just kind of works within the opening range gap, and then you can see where 10 a.m. gives us a true manipulation. In this case, where obviously I have highlighted 7 p.m. to 12 a.m. In a white rectangle, giving us the range. Now, what purpose does the 7 p.m. to 12 a.m. range serve for us? Now, we know that this range is important because when expecting price to move a certain direction, consider the opposite direction of the range to be taken as a turtle soup to set the low of day for price to continue from until close. Now, in this case, where honestly, me personally, I did not have a clear read on price. I was left in a position where it was very awkward for me to decide how price would continue to move. And following Thursday's reach to the 0.25 level of the weekly SIBI, I was left in a situation where I would just, it would be the most wise decision for me to just sit and wait and look at how price continues to trade and get further data on further price actions. So obviously what I'm saying right now is in hindsight. But it's important to notice it, it's important to draw it out and screenshot it, talk about it, because this enforces good habits and in the future, God wills, God wills, I will be able to notice this stuff real time. And it's nothing to be ashamed of if you did not notice something that you did notice after the fact. Anyway, let's continue talking about the price action. You can see how the low of that range, I highlighted it as would like to see this low reach as any manipulation during morning macro. Now, obviously, this wasn't as precise as I hoped it would be, and it's okay. This move did not happen during the morning macro, but it did happen during 10 a.m. Hourly candle. So as you can see, price, with the benefit of hindsight, had an interest in moving higher. Now, how does it use this flow here to help it move higher? It runs that low, forming this low here as the new low of day. Notice how the price action after the day did not come near taking this new low of day. Right, so let's really quickly move into the regular trading hours. As you can see, bottom right corner, we have now the regular trading hours turned on, which is the difference between settlement price at 4:14 p.m. previous day and the opening at 9:30 on the current day. So as you can see, that's where this gap has been formed. I'm not drawing it on this current chart here because really it's easy to visualize, and having too much drawings on my chart just overdoes it, and it just is not very neat. And that's not what I like to have on my charts, but everything that is necessary is visible on the chart. So What we have drawn on is the first present for value gap. We still have midnight open. We have that 7 p.m. 12 p.m. or sorry, a.m. low drawn on here. And let's really quickly talk about this gap here now. In ICT's most recent video, which is the same video that I will link in the comment section, he talked about the 9:30 a.m. Fair value gap, and this is the first time I've heard about this concept he's introduced, and I don't really think it's a proper concept. It's more like just a thing to take note of. It's just like not any other gap, but it's a gap that is to be considered similar to the first presentation for value gap. But as you can see, as 9:30 opened up, we have a big drop lower, forming us this gap that we have here. As you can see, I've drawn it out in blue, and I've highlighted its quadrants. As you can see, the respect of the 0.5 level is the main driver that brought us down lower here, and the run on the accumulation highs, which was formed in this kind of sideways price action here. So as you can see, price opens, runs lower, gives us our first presentation for value gap, runs beneath midnight open once, twice, and then starts to run away from it. And from there, we kind of accumulate inside of that gap until we find energy. This is actually after the 9:50 to 10 a.m. macro, which is opposite what I expected. I expected that the macro would be the thing that would give us the retrace and then the displacing run lower to purge the sell side formed at 21,349.25, which is just one tick above the weekly CB low. So as you can see, we run into the constant enrichment level, run lower, back higher one more time, fail to meet the rejection block that was formed here. And then from there, we would start to pick up and displace lower, fail to back on the first presentation for value gap. And something that I've been noticing recently is that the first presentation for value gap has been very sloppy. And it might just be due to inefficient price action because I've seen it work more often than not. And I'm not really expecting it to be 100% win rate. I'm not expecting it to be the holy grail or to hold every single day. But it's something nice to take note of to have market intent currently with how it's treating the first present for value gap, and it helps with deciding whether or not the opening range gap is going to be filled as a draw or filled as a manipulation. Anyway, after we had this big move over here that went down to that sell side, we started to get some returns higher, trading higher, accumulation here, and then we continue higher. And then as you can see, we get very sloppy at around the first present for value gap. And then from there, that ends off our morning session. This is where 12 a.m. lunch session starts. Which moving into the afternoon in the afternoon opening range, as you can see, there's nothing really worth mentioning. Try to look at the afternoon opening range or at lunch, just a bunch of accumulation up until where we got above the 0.25 level of the weekly CB, where if we move on to the ETH electronic trading hours, so that during the around last 10 minutes of the trading hours for Friday's close, we have this big displacing drop lower that ran all the way lower through the gap here and beneath the midnight open. And as you can see, this ran generally the entire day's range sell side liquidity. Now, what this tells me right now is that maybe preparing for a higher move during Sunday's open, depending on if we gap higher or lower. Honestly, I've not looked too much into the outlook yet, but I will be noting it down on my Notion. And I recommend everyone that's watching this and as a discretionary trader using ICT's concepts to do the same. Now, it's important that you be careful going into Sunday. I wouldn't put anything on expecting it to do generally anything specific, but I feel like this is a safer bet is to take a look closer during Sunday Open, and that will tell us more on what's more likely to happen. So I will take some time and I will decide if I want to create an outlook. I know at the beginning of the video I said that I've changed my mind and I don't want to make an outlook for the following week. But if something interesting does happen at Sunday Open, I will definitely consider posting my outlook. But on both cases, my outlook will be in my Notion journal. Thank you all for watching. I hope you all enjoyed this segment, this presentation. I really enjoy making these. I learn lots from these, and it's much easier than typing notes out in a journal. Trust me. Um, but as always, be safe.